Okay, cash price is the price which is only principal, not included the interest, and higher purchase price is the price which is including interest, which is included the interest, and higher purchase price is more than cash price. Remember this point. Higher purchase price is more than cash price because higher purchase price is included the interest and cash price is not included the interest. This is the point, remember. And next is higher purchase charges. Higher purchase charges means whatever extra charge included, whatever the extra charge included in the cash price, that is called as higher purchase charges. Higher purchase charges is nothing but interest. It is interest for late payment on the installment. Okay, higher purchase price, it is called as higher purchase charges is nothing but interest. Remember this. Then what is cash down? Cash down or down payment. Yesterday I explained this. Cash down. Cash down means it is the part of cash price. Remember this. It is the part of cash price paid by the purchaser to the seller on the date of agreement. On the date of agreement. Cash price. Cash down is the part of cash price paid on the date of agreement. That is called as cash down. ನಿಮ್ ಕಡೆ ಚಂಚಗಾರ ಇಸ್ಸಾರಿ ಅಂತ ಕರಿತೀರಿ ನೋಡಿ, ಆಯ್ತಾ? ತಕ್ಷಣ ಕೊಟ್ಟದ್ದು ಇದು ಕ್ಯಾಶ್ ಪ್ರೈಸ್ ಕೆಲವೊಂದಿಷ್ಟು ಭಾಗ. Cash down is a principal. It will not include interest. Cash down is not a part of higher purchase price. It is a part of cash price. Remember this. Cash down. Cash down is a part of cash price. Okay, it is paid on the date of agreement as advance. As advance. Okay. Then depreciation. Whenever the asset is purchased, you have to charge depreciation every year. Whenever the asset is purchased, you have to charge depreciation every year. Okay, so the depreciation may be charged on diminishing balance method or fixed installment method. Remember this. You have to charge depreciation on the asset. Then calculation of interest. This is the very important aspect in the higher purchase system. Okay. If you fails to calculate the interest properly, then whatever accounts you prepare, all those accounts will be wrong. Remember this. This is very important. In royalty account, you studied the royalty account in the BCom first sem. Royalty chart is correct, account is correct. In the same way, in this chapter, interest chart is correct, your interest table is correct, then your accounts will be correct. If the interest table is a wrong table, then accounts will be wrong. Therefore, you make perfect about this calculation of interest. Okay, calculation of interest. So regarding the calculation of interest, how to calculate interest and what are the methods? Okay, we will see that. The first method of calculating the interest. First method. In the first method, when cash price and rate of interest is given in the problem. Remember this. Whatever problem they give, that problem, in that problem, they gives you cash price of the goods, and rate of interest. If you go through the problem, in that problem, you will know the cash price of the goods purchased and rate of interest charged by the vendor. Okay. If the 2 points are there, cash price this cash price and rate of interest are given in the problem. You take the problem, read the problem. After reading the problem, you come to know whether cash price is there in the problem or not. Okay, first point. And second point, you find out rate of interest is there or not. If these two items are there, you have to prepare the following table. Okay. One more thing you have to remember. When cash price is there and rate of interest is also there, then in that case, there are two types of problems. And third point you have to see. If you go through the problem, you come to know what is the cash price of the goods. Second, you come to know the rate of interest. Okay, 2 points clear. Then come to the third point, whether the installment, third point. In the installment, interest is included or not included. Third point, you have to check. What to do? You have to check interest is included in the installment or not. Interest is included in the installment or not. Okay, how to check this? If you take the total payments made by the purchaser, if the total payments made by the purchaser is equal to cash price, total payments made, that means by way of cash down, first installment, second installment, third installment, up to all the installment and all the installment. You take the total of all the payments made by the purchaser. If that payment is equal to the cash price, equal to this cash price, then interest is not included in the installment. Okay. If the total payment made by the buyer to the seller, total payments made by the buyer and seller to the seller is more, you take the total payments made, you take the total of the payments made, and that total is more than the cash price, then we say that installment included interest. Installment included the interest. This is the point you remember. So here are the two. First is interest included installment. Interest is included in installment means the total payment is more than cash price. Remember this. What happens here? Total payments made is more than cash price. That is called as interest included in installment. Second point, interest not included in the installment. Interest not included in the installment means if you take the total, payments, the total payment is equal to cash price. Total payment is equal to cash price. If it is equal to cash price, then you say that interest not included in installment. Second condition. Okay. This is the point you have to check. Okay. You see here. Once again, I will repeat. You take the problem, read the problem, find the cash price. Second, find the rate of interest. Cash price and rate of interest are there. Then you take the total of the payments made as per problem. Total payments made, you take the total. Then compare that total to the cash price. Compare the total to the cash price. If it is equal to cash price, that is interest not included. If the total payment is more than cash price, then interest is included. I'll explain this one with the help of one example in the next class. Okay, this is the first method. Okay, this is the first method. For this method, this is the table. What is the table? First, how many columns are required for this method? 1, 2, 3, 4, 5, 6, 7. 7 columns you have to prepare. in your notebook. It is calculation of interest and depreciation. Okay. 7 columns are essential. In the first column, you write the date of transaction. Whatever transactions you make, for that you write the date of transaction. Second column is particular. Second column is particular. Whatever the particular of the transaction. In the third column, you take the cash price, total cash price of the article. This is cash price column. Cash price column. The next is installment column. Next column is for recording the installment amount. This is for total amount paid in installment column. And next column is interest column. Interest on each installment. To record the interest column you draw. Then next is principal. Okay, principal column. Principal column means principal in the installment. Principal in the installment you have to record in this column. So this column is calculated on the basis of installment minus interest is equal to principal. Sorry, name to what? In what the column calculate installment column in amount ತಗೊಂಡು interest ಕಳಿರಿ principal ಸಿಗ್ತದೆ. Okay, this is the principal column. Then next is again cash price. This cash price column is for calculation of depreciation. This column is for depreciation. Okay. Okay. Once again, I'll repeat how many columns required for this method of interest. 7 columns. First column is for date. Second column is for recording the transaction. In the third column, you write the cash price. This is cash price column. This cash price is adjusted according to payment of installment. Then next column is installment column. Thereafter, interest. Installment minus interest is equal to principal column. Then last column is for calculation of depreciation. We write the cash price and deduct the depreciation every year. That is the last column. These are the columns we prepare. Okay, this is the first method of calculating the interest. Okay. What you have to do? Take the problem, read the problem, then 3 aspects you have to see. What is the cash price in the problem? What is the rate of interest in the problem? Then third point, you have to take the total of the payments made. Total payments made. That the total payment is equal to cash price. Then you say installment not included interest. If the total payment is more than the cash price, interest included in the cash price. This is the point. And next, you have to search what is the rate of depreciation. These are the points you have to find in the problem. First point, you have to find the cash price. Second point, you have to find the rate of interest. Third point, you have to take the total of all installment and check whether interest is included in the installment or not included in the installment. Check that. After checking that, you find the rate of depreciation. If you come to know all these points, you can prepare the table without any doubt. Okay, this is the first method. And the second method, when cash price is not given in the problem. In the first method, cash price is there. Okay, you go through the problem, and after reading the problem, you come to the decision that cash price is not there in the problem. Cash price is not in the problem. Remember this point. The second method, cash price is not in the problem. Everything is there. All the aspects are there. Except cash price, remaining points are there. What are the remaining points? Rate of interest is there. Installments are there. Depreciation is there. But in the problem, cash price is not. If the cash price is not in the problem, then you apply the second method. The second method of calculating the interest. This is the second one. In the second one, what happens? Cash price is not in the problem. Okay. In the first method, everything is there. Cash price is there, rate of interest is there, then installments are there. On the basis of that, you come to know the interest. But in the second method, what happens? In the second method, everything is there, but only one point, that is cash price is not in the problem. Remember this. If cash price is not in the problem, you don't worry. Okay. If cash price is not in the problem, you prepare this table, interest table. In the interest table, you see the columns. First column is small, second column is small, third column is a broad one. Broad one. Third column is broad one, and last column is also broad one. In this way, you prepare the table. How many columns are here? 1, 2, 3, 4, 5. 5 columns you prepare. 5 columns you prepare and fill the information. Fill the information. In the first column, you write the date of payments. Date of installment and payments. Transaction. In the second column, you write the installment. Whatever installments you pay. And you consider the cash down as one installment. Remember this point. Cash down is also considered as one installment paid on the date of agreement. Remember this point. First column, date. Second column, installment. And third column is interest. Third column, interest. This column should be broad. This column should be broad. And in this column, I will calculate interest on the installment. Remember this. In this column, I will calculate interest on installment. Okay. Third column. And fourth column is principal. This principal column is calculated on the basis of installment and interest. Installment minus interest is equal to principal. Okay. This is the fourth column. And fifth column is for depreciation. Calculation of depreciation. You draw that column, a long one, a broad one. Okay. So this is the second method of calculating the interest. Second method of calculating the interest. In the first method, everything is there. Cash price is there. Rate of interest is there. Installments are there. Depreciation is there. On the basis of that, you have to judge. First method. And in the second method, everything is there, but cash price is not in the problem. Cash price is not in the problem. How to solve the problem? This is the table for calculating the interest if cash price is not in the problem. Clear? And third method. Come to the third method. What is the third method? In the first method, cash price and rate is given. Clear? Second method, cash price is not given. Come to the third. What happens here? When both cash price and rate of interest is not given. Cash price is not in the problem. Rate is also not in the problem. Cash price and rate of interest both are not given in the problem. We go through the problem and read the problem carefully, but we find that The rate of interest is not given in the problem. The rate of interest is not given in the problem, not the cash price. Cash price and both rate. Sorry, check it. Rate of interest is not given in the problem. This is the point, not both. In the first method, cash price and rate is given. In the second method, cash price is not given. And in the third method, they will not give you rate of interest. If rate of interest is not given in the problem, how to calculate the interest? That is the third method. In the third method, we calculate interest. If rate is not given, rate of interest is not given, the same table, date, installment, interest, principal, depreciation. These are the columns for your table. With these columns, you can calculate the interest. You can calculate the interest. Okay. So date column, you write the date of payment. You write the installments in the installment column and calculate interest in the interest column. Okay, this column is drawn. Installment minus interest is equal to principal. You remember this equation. I'm repeating once again. Installment minus interest is equal to principal. Clear? Then depreciation we calculate according to the given method. Okay. This is the third method. First method, cash price and rate is both are given. In the second method, cash price is not given. In the third method, rate is not given. Rate of interest is not given. Okay, this is the third one. And fourth is when any method is applied to calculate interest. If they ask to calculate interest under any method, how to calculate interest? Okay, we calculate interest based on any method. That is the third one. Next one. Date, installment, interest, principal, and depreciation. On the basis of installment method, we calculate. This is the next one. Annuity method is very easy because they will give you the interest as per annuity table. As per annuity table, we calculate the interest and principal. There is no problem. It is VG one. And fifth method is only when only last installment and rate of interest is given. They will give you in the problem, they will give you the last one installment amount. Last installment amount, they will give you. Rate of interest, they will give you. They will not give the cash price and they will not give you the other installment. They will give you the number of installments. About this type of question, I'll tell you. They will give you the last installment amount. Then rate of interest, number of installments. But they will not give you all the installments and cash price in the problem. Then how to solve the problem? And for this type of problem, we apply the first method. In the first, whatever I already explained, the first method, the same one is applicable here. Date, particular, cash price, installment, interest, and principal and cash price. This is the applicable method. Okay, these are the methods of calculating the interest. Tomorrow I'll take one example on each. First method, one example. Second method, one example, like that. I will take 5 to 6 examples on calculation of interest. And thereafter, I will take the accounting procedure. Okay. And in this chapter, important aspect is calculation of interest. Calculation of interest is important aspect. And now your time is up. And I conclude here only. And in next class, I will take some examples on calculation of interest. These tables I use and calculate interest and make you people perfect in calculation of interest. Okay. And tell your friends to join the class. Otherwise, your attendance shortage may arise in future. Therefore, I am informing or telling you repeatedly regarding your attendance. Attendance is compulsory. I am taking the screenshot of my laptop and recording in my attendance diary. Therefore, you be aware of your attendance. Suppose you fails to attend the class, you go through the YouTube link.